Breakthrough Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Tuesday afternoon. I'm Juliette Sarli. Let's have a look at where the local market is finishing out the day's trade on what has been somewhat of a turnaround, but not quite the recouping of all of what we lost yesterday. We've regained about a third of what we lost. So let's have a look at where the CBO 200 is as we round out the day's trade. Of course, yesterday we had that 2.9% drop. Today, the CBO 200 up by 1.3%. So it is faring better than what the ASX 200 is faring, which is only up by around 0.9% as we head into match off. So losing somewhat of those earlier gains when it was up by about 1.5%. And as I mentioned, around a third of 1% recouping what it lost yesterday. This is all after we heard President Trump overnight indicate that the war could be over soon. You also, of course, had that big reversal in what we had seen in crude oil prices. It had one of its wildest days ever yesterday. WTI futures swinging about $38, the most since the pandemic. Still, though, the vital Strait of Hormuz remains effectively closed, and that's led to major producers in the Gulf, including Saudi Arabia, curtailing output. Now, G7 finance ministers have said they're ready to take on any steps needed to support energy supply, including these strategic oil reserves, and that has sent that oil price fluctuating hugely from around $120 to around 88 or 90 where it's at the moment. I think WTI crude's about 94 at the end of the Asian trade. Weighing though on the energy sector, which is losing around 3.3%. So that really brings us to those themes of the day, the Tuesday turnaround, the crude crash, and then consumer concerns as well. We had two consumer sentiment surveys out today, which did give a little bit of somewhat of a conflicting picture. On the one hand, you had the Westpac Melbourne Institute survey showing consumer confidence bounced back by around 1% in March to a reading of 91.6, however, still below that 100-point level, separating the optimists from the pessimists, while a separate survey of consumers from ANZ showed a sharp drop in confidence over the last week as the conflict in the Middle East pushed petrol prices higher. Now, of course, what does this increase in global inflation caused by oil, caused by higher petrol prices, mean for the RBA? I spoke to Challenger's Jonathan Kearns, who has been pretty accurate in gauging what the RBA will do over the past couple of years or so. He thinks we won't see a hike until May. However, I will note that the Bank of America has come through this afternoon saying that they think that this increase in global inflation could cause the RBA to actually hike as early as their March meeting, which is next week. All of that, of course, weighing on consumer stocks. Let's have a look at how they finished out the session today in terms of some of the movers from that consumer discretionary space. Coles and Woolies are probably more consumer staples, but we saw a bit of a mixed picture there. JB Hi-Fi up 2.5%, though Aristocrat up by 1.3%. Let's have a look at some of the energy players, and of course this is where we saw weakness. Korean Energy down 7%. It had soared by as much as 10% yesterday. Santos and Woodside down by 4%. I had a great conversation with David Lane from OrdMinute about what he's looking at in this space, and I will note that pretty much every stock on that energy board is still either a buy or a hold from the team at OrdMinute. And then having a look at what we saw in tech players, this is where there was quite a bit of a rebound. Life 360 up almost 10%. TechnologyOne there was up by 4.3%. In other corporate news, Fortescue Metals completed its acquisition of Alta Copper, taking full ownership of a copper project in northern Peru. Shares up by 1.3%. Westgold Resources had its best day in about 1.5 months on expansion plans. CSL, it will spend about $2.1 billion expanding its plasma manufacturing operations in the US. And Telix soared on a positive phase 3 trial. Heading the other way, Air New Zealand suspending its 2026 guidance due to rising oil prices affecting the jet fuel market. Shares down 4.3%, with still a lot of concern in terms of what we're seeing with the overall airline sector. All right, let's get our guest and welcome to the COB, Baz Kooijman from DHF Capital, who actually joins us from Dubai. So Baz, just give us a bit of an understanding of what's happening in the part of the world that you're in.
Oh yeah, it's actually a very rough 1.5 week already in both the whole situation in Dubai as of course also in the markets. So at this moment it is a lot more under control for our feeling than of course at the start. And yeah, we have all been just working from home and waiting for all the issues to dial down a little bit more.
Absolutely. And I guess what we did see overnight was a reversal somewhat in that wild crude trade on the back of President Trump hinting the war could be over soon. Where do you see, or how much more volatility do you see here occurring in the crude market?
Yeah, on the oil market, they really surprised us yesterday with the price jumping over $100 a barrel. We did see yesterday sticking above that 100 price for quite a while. Um, Basically, we see that the oil can go to about 120, 130 if all the tensions stay. If those tensions are being resolved, the long-term trades, the long-term forwards on oil are still trading about 65 to 73. So the nice thing is that if we don't see adjustments yet on the futures, we do believe that there's still a chance that it will bounce back to, let's say, normal from the prices from 1.5 week ago.
Yeah, I mean, there's a lot of focus here on the picture, though, in what of terms of what it means for global inflation, Baz. How do you see that playing out? What is it going to mean potentially for the Fed?
Well, from the Fed perspective, I think that rate cuts we can maybe forget for a while, even though of course they were planned. I think we are not trading oil at the DHF, but we are looking at oil as like kind of the global standard for all other things you trade. When we are trading gold, when we're trading stocks, it's extremely important what that oil price is doing. And when the oil price would have been hovering around 80, some companies would already adjust their prices. When they adjust their prices, when shipping is more expensive, when basically everything gets more expensive, we will see inflation grow. And if it goes to 100 or stays above this 100 level and it stays there for a while, we'll see flights becoming more expensive, travel becoming more expensive, energy becoming more expensive. Like day to day expenses will go up for everyone in the next 2 or 3 months. Inflation will rise. And then, yeah, we will have to see what that does with the stock market if the companies can keep up with this kind of energy prices.
Yeah, it's a lot that's happened in the last 5 years or so, isn't it, for the global world order to contend with. So when you say what you are trading, I mean, if we look at gold, if we look at the US dollar, the greenback is certainly showing signs here of being a safe haven play again.
Well, gold always is a safe haven basically, and we are expecting the base case target to be 5,400, 5,600 for the year. Now, of course, we've seen this kind of crazy push already again in the first 2 and a bit months of this year. Bullish scenario is maybe 6,000. But if the tensions stay, I've seen models getting gold to $8,000 an ounce. Like it's just all about the global tensions, and that if we don't see any rate cuts, if we see the geopolitical not de-escalating, I see some profit taking on the gold side for people who have been enjoying this gold run. But it's directly being eaten up by just general buyers. Central banks are still buying, hedge funds are still buying. So yeah, it's still on the rise.
What does it mean more broadly for risk off sentiment, Baz? I noted that JP Morgan says that they see a potential 10% correction for the S&P 500 amid this war premium.
Yeah, so I think that we can also expect corrections on the gold side. We expect about 8 to 12% correction on gold. It's kind of always when there is such a big run on a certain asset, is that there is a natural or technical correction If we see a correction on the stock market, that means that the funds always have to go somewhere, and it's not that literal anymore as it was before, because we also have different asset classes like crypto nowadays. But basically, I see it as a weighting scale. So when the money goes out of the stock markets, where does it go? And that mostly goes into more safe haven assets, for example, gold. And then when the stock markets normalize again, the money moves back. So that's what we will have to see, which one goes first. And for that, we are looking simply at the oil price at this moment to see how those companies are going to survive the higher energy prices.
All right, Baz, really appreciate your insights. Thanks so much for joining us from Dubai. Baz Kooijman from DHF Capital there. And of course, a lot of volatility. I will note that ClearBridge is indicating that history tells us that buy the dip may come through, given all of the volatility that we have seen recently caused by the oil or the war premium, if you will. All right, getting back to stock specifics, the stock of the day was Telix Pharmaceuticals, and Andrew spoke to our experts, Philip Pepe from Shaw and Partners and Rudy Philippek van Dijk from FN Arena.
I think it's a buy, and I'll put it in layperson's terms why I think it's a buy. Firstly, people like Laura, who you mentioned, and her colleagues, her peers, have a price target on Telix more than twice the share price, around $22. So the professionals in the biotech space, I am not one, think this is a storm in a teacup. In layperson terms, last year there was today's positive announcement regarding a drug, Telix 591. And there's a related one, 592, was the subject of an SEC inquiry. That was around September, October. You can see share price has fallen since then. The short position in the stock has built up since then. It's now it's the fourth most shorted stock, actually the third most shorted stock on the ASX.
I'm not a medicine guy, but I know a few things about how the market operates and stuff like that. This market is extremely momentum driven. So this company is widely regarded by people who do cover biotechs in Australia as one of the better ones, the one that has all else being equal, most likely a very profitable future.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's have a look at the market leaders on a day when we recouped about a third of the losses from yesterday. I mentioned a lot of upside in tech. Life 360 there up 10%. We just heard as to why Telix rose today. Neuron also having a good session, as was Drone Shield and Paladin Energy. In terms of what we have seen going negatively today, let's have a look at the laggards in the session. Pantoro was down by some 22%, and then of course it was the story of a switch out of those energy players. Given that Karoon was up by about 10% yesterday, I guess the 7% decline today has to be put there into somewhat of a, I guess a little bit of a story in terms of, you know what I'm trying to say. All right, let's have a look at the small end of town. Sky Metals was up by context. That's what the word I was looking for. Sky Metals was up 19%. Island Pharma had a good session as well, up by 14%. All right, to the downside, we saw American Tungsten down 22% and Vista was down by about 9%. Tonight, the US NFIB Small Business Index is released. We've also got, of course, the quarterly earnings continuing as well, including Oracle, Franco-Nevada Corporation, inflation data on Wednesday, GDP data figures coming through on Friday this week. So it is quite a big week for data in the US. Tomorrow here, though, we've got Japan PPI expected to be 2.2% higher year on year, and a couple of stocks going ex-div, including Brambles, Breville Group, and Cleanaway Waste Management. All right, let's have a look at where the SIBO 200 has finished the day's session. A very solid session on that index, up 1.3%, while the ASX 200 has closed firmer by around 1%. So as I mentioned, recouping about 35 billion, if you like those numbers, of that 90 billion market cap that it lost yesterday, or about 1/3 of 1% of some of those losses we saw yesterday. Certainly energy coming under pressure, a bit of consumer staples and consumer discretionary stocks as well, but elsewhere the tech players, the materials, the healthcare sector all looked very good. So let's see if these encouraging words that the conflict in the Middle East may be coming to an end continue overnight, the big moves that we might see in commodity markets, and see how it affects our investments. We'll do it all again from 9:45 a.m. Eastern tomorrow.